All right, what is up, guys? Welcome back to Money Makes Money or Money Moves Money. So today I'm gonna be showing you my accounts, what I'm buying, like how to pick and find stocks to buy, and what resources I use. Completely free, guys. So here's my account. I mainly use $7,000 right now. I'm managing actively about $2,000 right here. My custodial Roth IRA, guys. Remember the IRA? Some nice percentages. I did buy at market highs, so I'm not that up right now on this one. This was around I started recently. So let's just go over some of the stocks I hold. So you may know a lot of the big names, like you have Meta, which is, and then you have Microsoft, Netflix, Google, Amazon, all that stuff. So they also have ETFs. So like I said, I have 50% ETFs with 50% stocks. So this is my actively managed IRA, which is the one I trade in a lot. So here's what I have. So let's start with the ETFs. This is a simple one. If you are new to trading, guys, please go with ETFs. You guys need to go with ETFs. So here I'm gonna go from the first the best one, SPLG, the Spider portfolio, the S&P 500. This is the cheapest S&P 500 um, ETF you can get, not from Fidelity. Like this is the cheapest one that anybody can buy. So I had almost 10% of my portfolio. Obviously, the goal is to try to beat the index. That's the benchmark. But if you don't have this in your portfolio, you are fundamentally doing something wrong. So, of course, I have tons of this. So, I have cows, one of my favorite ones. They also, when you look at ETFs, you have to know about their expense ratios, guys. Expense ratios. How much does it cost to keep this ETF in your portfolio? Because it's managed, it's not like a stock. So, this one maybe it's a little higher, 0.6 expense ratio. So that's the percentage that gets taken out each year just for holding it. And SPLG is like 0.02, really, really small. So cows, cash flow. This is like the mid cap stocks that haven't got large caps. So everybody loves large caps, nice and safe, but mid caps have more value and they're not as unstable as small caps. So I have the mid cap cash flow stock out of the Pacer 100 index right here. So what it does is basically it takes the stocks by cash flow and puts the top 100 in there. So which cash flow? It's the money you have after earnings, revenue, and all your costs over there. So after everything, this is the company that's making the most money. They're not in the negative. So, and similar to that is VFOL, Victory Shares Free Cash Flow. So how is it different? It takes predicted cash flow. So instead of taking the companies that have the best cash flow, it takes the companies that are expected to have better than expected cash flow and reoccurring buildups in cash flow in the future. So this one has done a little better, maybe about 20% a year. Cows, maybe like 11%, but it's up and down, up and down. Next, you have, let's go over. There's a bunch of random Fidelity ones. There's bigger name ones, but I just want to go for a little something different. Of course, you had your well named ones, SHD, which is your dividend portfolio. Dividends, if you guys don't know what dividends are, you get a dividend like every payout every month, like as a percentage that the company gives back to you for owning the stock. So these are all ETFs right now, guys. These are out of hundreds of stocks in there. You don't have to pick any of them. The fund manager or like the passively active ones, they pick them all for you. You don't have to worry about it. That's why I got 50% on these. So just know it's dividends. They're nice value stocks. JQual, that's a JP Morgan value quality factor, which means balance sheets. So revenue, cash, debt, all that stuff, fundamentals. Good on that. Gold. I love holding currencies. There's gold right here. Healthcare. I love healthcare, finances, and um, energy, which I have this is my choice of a healthcare ETF, the cheapest one, not very known. Then I have my Utes, which is an aggressive utility one. It's not like energy where they use it to sell to where they use the energy to sell to consumers. It's people actually in the process of getting it and shipping the energy. Well, not shipping. There's like a process to the energy like Exxon Mobil, where they actually sell it to the consumer. So it's a little different. So URA, that's uranium. You don't have to mess with that one. That one's really risky. It's uranium, which is nuclear energy. UTS is also nuclear energy. That's why it's more aggressive. So yeah, small cap enhanced. This is not my favorite small cap. I just have it in here because interest rates are going to get cut 100% cut rate in September. So that's why I have small caps here. So might as well trim it a little bit more, but don't put in that one. Large cap, just go with you see this SCHG. SCHG. This is a little different. SCHG is the best large cap growth one. This is a little more it's enhanced, so it's like a little more actively managed. If you want to go with this, and I got with the Franklin Bitcoin ETF. There is zero expense ratio of Bitcoin ETFs. I just haven't had the chance to like put it out, like to sell it and switch it because that has cost of its own. DJRL back to dividend growth, but this is like growth dividends. So if these are companies that actually grow their dividends more, it's like similar to VFLO. It's expected growth in dividends, and like these are more of techie stocks here, but there's still value. So, and then I thought I had a value ETF, large cap value. Oh yeah, this one, large cap value. Basically, on the fundamentals, it's companies that are worth more on the spreadsheets than they actually are pricing right now. So, it's companies that are undervalued. So versus like a growth ETF, which have a lot of companies that always boomed up and they're high in value. So let's get to the single stocks, my favorite part. I put more in some mornings. So let's go over the big ones first. Amazon, currently about, let's see, 10% of my current portfolio on Amazon. I bought it on the really lowest when the earnings lost and the market cap was shrinking. But to get this, the stock dropped almost 20%. And the analysts only moved their price target like $5 less, $10 less. That's out of 170. Like that's out of like almost at 200. So there's not justifying a 20% drop for that. So you got to always check that if it's like they're overreacting to the news because a lot of people aren't doing their own research. So I bought into that, and I'm already up like 5% just in one day. I had Chipotle, not my favorite stock. It went down like because the owner, the CEO, moved to Starbucks, but I bought in that, so I'm making a little bit on that. Netflix, of course. If you're gonna, when you start off, you always got to go in large cap quality companies that are very predictable. Netflix. You have what else? Microsoft, Meta, even Google with the little problems right now. I love Meta, a little undervalued. I do not like overvalued companies. So let's get into stuff. So the other companies I hold are like like picks from super fund holders. What are super fund holders? So this is the first YouTube channel I'm going to recommend. Joseph Carlson. He is like the most consistent. He does his research and only holds like 6, 7, 8 stocks. Not like multiple like me. He does his research. They're really fundamentally great. So he posted this video on his after hour show. It's super investors. So I was looking at that and I already had stocks I like. I just use this to confirm my values. So like they're buying it. Oh, these guys are the best and the best finance guys in the world. So why not put a little bit of faith in them? These are finance stocks, a little bit of spread because a lot of people have a lot of growth. So what do I have in here? So finance, ACN. Basically, what it does is it helps with managing smaller firms with their money and like health with the firm. So it's basically getting the small because smaller firms are more debt rich. So this takes advantage of that. Next, you have what's here is Intuit. Same thing, finances, and then this is large cap companies. Next, I have Moody Co, which deals with debt and debt with the company. So let's go ahead and get a better example of Moody Co here of what it actually is data financial stock exchange. So like a lot of data, analytics. These are all finances because like these stocks are held by the top fund managers, Warren Buffett guys. That's probably the only name you'll know, but they hold these stocks because they're super consistent and they love these stocks. What else is there? So okay, I think I only had few. Oh yeah, SPIG. Where is that? SPIG. My favorite. If you're gonna buy a fundamental stock for finances, SPGI, S&P Global Inc. It's basically the same thing as Moody Code, just a little bit lower in valuation, less expensive right now. This is the one I'll probably go into. A little bit of a riskier one would probably be Intuit. It's a more grower, but it's a higher valuation. Same with this one right here. Then of course I got my smaller caps. Let's go over two small caps real quick. GigaCloud. Oh, I got actually slammed by GigaCloud. This thing is such good on the balance sheet, but it does not perform. It basically does services with Amazon. It helps them with their business services and shipping products. Next, SoFi. This is my small cap pick right here. SoFi. Great stock. They hit earnings. Online banking platform. I'm gonna open an account with them. Also, gonna do a credit card. If you guys do not know this, open a high yield savings account when you're 18. High yield savings account. Your parents probably have your money in a regular savings account, but you can take it out 0.5 max on the what you get over year. But for high yield, you can get 5% for just sitting your money, just your money sitting in there. So there's that small caps. So also I took, oh my goodness, Rocket Labs and Lunar. do not buy these stocks, but I bought them 2 days ago. Do you want to see what it did for me? It's instantly 12% today, another 20% yesterday, and where's Lunar? I didn't put a ton in here. This is not my portfolio. This is my simulator, so it's down 2%, but I'm like you see 8% here. And then Rocket Lab 24% there. That's $1. But I just put one in the simulator to show the values I'm getting out of it. Shopify was a great one I hit before earnings. What else is good here? Okay, that's basically all my top earners. Marvel. Okay, let's get into it. So my top two favorite stocks is Amazon. Like I said, you got Amazon Web Services, you got Amazon Fresh Stores, you got Amazon Prime, you got Amazon Prime Video with all the ads that you love. Just spam your customers' ads, but make that ad revenue. Next is Pinduoduo Holdings. You know Temu. There's Pinduoduo in China and Temu in the United States. This company is so fundamentally great that even Amazon is gonna put a little like Chinese section of their app in there, or like and Amazon Prime is going to be a Temu section in Amazon. So that's great. So this has gone great for me, 10% the last 5 days. I'm thinking it's great. I manage money for people, and my friend, he put like 100 shares in here, and he's doing great for him. So that's probably my favorite one. It's in China, so it's a little more risky. That's why the valuation's lower. Procter and Gamble, basically everything you have, like Colgate, all like the brushing teeth products, everything like the wholesale foods. More than half of it's probably owned by this. So this is a great safety stock. Johnson and Johnson, one of the largest firms for healthcare. I should say I love healthcare. So most of these are again financials because I love financials. But you gotta spread it out a little bit. Spread it out. Mastercard, and Visa. Visa, especially lower valuation, but they're selling cards like crazy, guys. I love these two stocks. Do your own research. And of course, I have my one REIT stock, which is basically real estate, BCI properties. This is a favorite of Joseph Carlson. He owns this, Microsoft, Google, Amazon. Yeah, I don't stay away from trendy stocks. The more trendy a stock is, the more likely it's to be overinflated. Oh yeah, I didn't talk about a couple more. Uh, MCI, my three favorites, undervalued. Tech stocks right now. Super micro computer. Oh my goodness, I spelled it wrong. I'm selling, guys. Super micro computer. If you want long ball and you do not want too much risk, but you want a heck of a gainer, super microcomputer. This valuation is really low right here. 1 year estimate. It's an average of even people. So one could have probably has like 2,000. One says might go down to 500. But if you look at the analyst, you can probably see the average price target. Yahoo Finance is the first app or website which you can use. They missed your last earnings, but this is a quality company, guys. So it's gonna go back up. So you see the lows 300, highs. It's better. Like a lot of these stocks, like General Energy, aerospace, it has like more concentrated in the top. But this is like a little more risky play, obviously. So not a lot of people are gonna be doing it. But okay, this is why I do not mess with chip makers. So like Nvidia, AMD, those guys, I like. This is more of a computer hardware software technology software, guys. Same with ASML. ASML is another one, but this is not. I can't really get this because look at $900. I'm not gonna spend all my money on this one. So this is another high valuation right here. These went crazy in the last 5 days. I hold this one in my other accounts. So let's get back. Underrated picks. A General Electric Aerospace. I have this one in my portfolio too. Yeah, basically just I know it says aerospace, but it's not like rockets. It's like plane parts, unknown company. But a lot of hedge funders actually own this. And one of my friends, financial managers, he's an older guy, financial manager, actually invested in this a couple days ago. So like, all right, I see you. General Motors has the key in EV. This is one of two trends in my portfolio with General Motors. One, it's a very undervalued company, even though it's going down. United States production is what I'm going for, guys. EVs, they're a super stable company, great balance sheet. Same thing with MU. Micron Technologies is a United States supplier of chips and software. United States supplier, guys. Same thing with Marvel. I had, but MU's a little safer, lower valuation because it was a Chinese chip makers that were going crazy. Nvidia, Taiwan Semiconductor company, but now it's a shift so that the United States wants to get more of the United States in play. So MU, my pick for that. Let's see. I think we covered almost everything. Meta. Come on, guys. You guys use Instagram. You guys use Facebook. Okay, not Facebook. They have their own. They have like their own AI thing too. So it's kind of crazy. Like this thing's not going away. Microsoft, and Amazon are basically their own ETFs and a whole list. They have tons of products. They have tons of services. It's awesome, guys. Netflix. Okay, I'll probably say Netflix and Costco are great. I don't hold Costco right now because it's a little overvalued, but they have super easy. For example, let's compare it to Adobe. You know, guys, whatever. If you don't know Adobe, it's basically editing software. My Netflix, easy. One tap canceling subscription. Adobe just got sued because you can't cancel. It's like a year subscription. Very liable. You can cancel whenever you want. People know about this. Only bad thing of this future generation pirates movies, including this guy. But yeah, those are my picks right now, and so I went over the ETFs. So how do you find these picks? So let's talk about it. Okay, let's say this guy for later. Number one, Joseph Carlson. Look at his portfolio, guys. He does his research. He invests in like 8 different stocks. He has 2 different ones. Let's see Patreon links. Don't join his Patreon. In the links of his videos, he has 2 different stocks. One for dividends and one for growth. Both great. Just look in there. He has high quality companies. Many that you know, many that you don't. So he is probably my go-to if you want to like just start with stocks, but of course start with ETFs. You will not go wrong with him. Next, invest with Henry. Like I said earlier, this is my options trading guy. He plays puts. Basically, let me explain it for you guys. Puts. Basically, you want to find a stock that you think's gonna go up. Maybe it went low and hit like a little support resistance, guys. Support, basically where the stock bounced back from the bottom up to the top again. Basically, you know, like bam, 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 bam. Buying pressure, selling pressure, buying pressure. So high value stocks, you want stocks that you like, because basically, so here's the put, right? You say, oh, I don't think the stock's gonna drop to like, let's say it's at 1,000. You think it's not gonna drop to 900 here, right? So you put the put in. If the stock drops below 900, you force to buy the stock here. But for the put, the seller is selling you the put, so you made like the $300 for the contracts. So if it goes below, you have to buy 100 shares here. But like, it's not bad because you already like the valuation of the stock. It's preferably a large cap, so you're getting a better deal essentially than if you bought it right then. Different case scenario, you bought the put. You can pay your $300 for your 100. It's 100 contracts. It's a lot. You have to buy 100 stocks. So it goes above. Boom. Well, you made a $300 and you didn't have to buy anything. You just get paid the money. That's why puts are way better than calls. But my real strategy is I do calls and puts, which calls is a little more risky, more complicated, but we can get to different times. So, and last guy for like my small cap stocks, you got Joseph Hogan and CFA. The trend here, all these guys have worked in financial markets before. So CFA here is basically what is it? He was working in professional hedge funder before. So more of small cap stocks, more like stocks to buy. Like if you're like, I'm not huge into small caps, I've learned my lesson already. But if you're in that stuff, you can just look into some of this stuff, check the stocks. Next, okay, resources to use. Simply Wall Street free resources. Also Bezinga, but this is the one I use. Basically, strip a stock, it shows you its valuation. They have analysts on here. So let's go to Pinduoduo Holdings. Very rare site here. Perfect scores. Obviously, it's a China stock, so that's why the valuation is lower. And people aren't growing heavy in this. Health just have debt. 5 out of 6 checks. Past performance has it done good before, so we know it has potential. Future growth. Does it have? Is the market open to grow? Yes. And is it undervalued? Yes. This is what you want to see. Dividend. This is a growth stock. We don't really care about dividends that much. So let's go into something that isn't good. So let's go on like our all favorite Tesla. Let's see Tesla. I actually haven't looked up Tesla before on here, but I don't think it should have that great of financial statements. Ooh, this thing is not looking great. Health, at least it doesn't have that much debt, but it's not yet profitable, so future valuation is not great. Valuation, this thing's way overvalued. It's barely even profitable. It can tell you high level of cash flow earnings. Projected to go 70% year-over-year growth, but it will not say the valuation. Earnings grew by 1.3%. That is not a lot, guys. Also, earnings works. How earnings works? When you earnings, it is not doesn't matter if it grows. It has to grow over the amount that the estimate that the professionals predicted. So exactly, Pinduoduo, it's trading before 67% of the analysts. I think it's fair value. They have 401 analysts on this one. This is all free, guys. As long as you don't scroll below here, it will not put you. There's usually an ad that comes up. Maybe it's slow, but yeah. So there's sometimes a risk. Shareholders debuted last night, so it'll tell you definition. When a company issues new shares, it decreases existing shareholder ownership. This is a shareholder ownership, guys. And then there's other warnings that it would say like people are massively selling it too. Have not shareholders have volatile share prices, stuff like that. Bad. This is actually BN wrong one. Brookfield. There's something here you not want to go in. This is something. Oh my goodness, this is actually terrible. But this is a financial company, so they probably got under control. But still, oh, see, that's what scrolling to the bottom does. You want me to buy, but anyway, items large enough earning. What's that mean? They have an item that is basically killing their sales because they have a problem with it. Sales are earnings are expected to decrease. Interest payments are not covered by earnings. Blah blah blah. But earnings grew by 500% last year. That's the only reason people are holding on to this. And I don't know if it's that risky, but they really want to stay away from these. So let's put your stock in blah 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 blah. Okay. Next you got Yahoo. This is actually the go. You can see the evaluation on your phone. It's a little easier. You can just click details, but you got the option strategy, analyst, holders. You can see who's holding it. I love the analysts right here. You can see the little price targets. That's a concentrated average. Some people are up here than down here. And then you get a number of analysts on this stock, the average estimates, revenue, all that stuff just for free, guys. I'm not even signed in. I probably forgot to sign in here. So, anyway, there you go for ETFs. These are the two ones I mainly use. There's also Bazinga, which you use for news, but Yahoo's great for news. Just like get your news right here. See what's booming. Bang. Tech rallies, whatever. Finance. Yahoo Finance, not the news part, the finance, because finance will show you news on the financial markets. It's not that bad, guys. Like, if I want to buy something, I just wake up at 7 o'clock. I'm gonna go right ahead to school, and then I just the markets are open for 30 minutes. I see where it's trending, see if it's worth the buy or not, and I just put it in. Is there anything I didn't mention here? So let's go over a little bit. My positions in here. So I got a lot of finance companies. Amazon, Pinduoduo Holdings are my favorite too right now. Amazon and Pinduoduo Holdings. So you also have Super Micro and ASML and MU for the underrated tech stocks. I'm not big on the tech stocks. Microsoft, Google, and Meta for the best Mag 7 stocks. That's my favorite safety stocks: Procter Gamble and J&J. My two cardholder stocks: Mastercard and Visa. My two debt or finance stocks are Moody Co and S&P Global. This is for small cap manager, ACN, and another large cap firm is Intuit. General Motors for cars that I spaced it out. General Aerospace. And my favorite ETFs, we got to go with SPLG, of course. Then I go with cows, VFLO, my two favorites. I love cash flow. And probably the GLDM of gold and maybe SCHD for the dividends. But anyway, thanks for watching this far. If you did, that means you got a subscribe button. Or if some of y'all watching my video, I know like. Anyway, I'm tired. I got work like in like an hour, so I gotta go.